I'm Charlotte McLeod with the Investing News Network, and here today with me is Jeff Swinoga, National Mining Leader at EY. Thanks so much for joining me today.
Oh, thanks, Charlotte. It's a pleasure being here. I love PDAC. You know, it's 25,000 people coming into Toronto, and it's a bit cold today, but I always wish the weather's warmer so people have a good impression of Toronto, but we seem to bring the cold weather. Yeah.
Tell me how the mood feels to you so far here.
It feels pretty good. You know, I think it's a little bit different than last year. I think we've had, for example, gold prices moving up, palladium's doing really well, so I think the mood in the conference is quite good. Yeah.
And how are you feeling about the resource space as a whole as we head into 2019?
Resource space in general?
In general, the resource space, mining space.
Yes. Oh, yeah. No, I think there's a lot of optimism. I think that certainly with the announcements of some of the recent big mergers that have happened, have really sparked interest, and so people are asking more questions, and interest in the sector is always good, tends to be. So I think I think the mood is generally quite good because now people are talking. So anything that creates more conversation tends to be a good thing. So what's next? What's going to happen? Are there big companies going to merge? Are we going to create a global leader or not? Right? And what's going to happen to the mid-tier space? What's going to happen to the junior space? Right? So I think So I think the interest is good. I also think that what's been happening has been something that's been. If you look back about 7 years, there was a more active investment in the sector. Now there seems to be less because as investors look to ETFs and more passive forms of investing in the mining sector, it's challenged mining companies to raise capital. And so what's happened now, and we haven't really found any large deposits recently. So those couple factors have kind of led to mining companies trying to attract the generalist interest in the sector. So that is that's why I think we're sort of seeing some consolidation talk happening to try and create that interest from a global perspective.
And would you agree that we do need those generalist investors to come back?
Well, I'm not quite sure what form or fashion they should be consolidating, so I think it's interesting that it's being contemplated. I think it's because of what's been happening, 5 to 7 years, and this is what's kind of culminated to this. I'm more interested in seeing what happens to the mid-tier sector and the junior sector, because the big mining companies tend to get all the attention. But then what's going to happen to the mid-tier? Are they going to stand back and wait? Are they going to keep their powder dry? And then what's going to happen to the junior sector? How are they going to fund their projects? So that's going to be really interesting to how it unfolds the next couple of years.
Those are good questions. Do you have any thoughts on the mid-tier space, the junior space? Where might they go if this is happening? Well,
even the mid-tier space, they're looking to stay relevant and looking either for capital to fund their projects and how to do that over the long term. I think the mid-tier is going to be focused more on productivity and how they make their existing operations, embracing digital tools, how to do things faster and more accurate information. That's why EY, we've got a lot of digital solutions along the value chain to kind of help out. But I think that's going to be focused on margins and productivity, right? To really make sure they're running their companies as best they can and how they go forward. So I think that's what's going to happen. I think they're going to hold back and wait till some of the majors kind of figure out what they're doing, some of the divestors may be coming out of that space, and then figure out how they want to proceed after that. But they're really focused on their current operations as far as I'm hearing, right? And from the junior perspective, I think it's really attracting that capital for exploration, because as I mentioned, we haven't seen a large deposit found in the last couple of years. And so if you look at some of the investment dollars that are going in exploration in particular, it's going more into existing mine site exploration as opposed to grassroots exploration. So if that reverses in the future, that's great. But also that means that the consolidation aspect does have some merit in the sense that they're doing exploration around the current deposits, right? So the junior sector, I'm really hopeful because that's the lifeblood of sourcing big deposits, finding the next big deposit that some of the majors can look at, some of the mid-tiers can look at. So I'm really looking for the juniors to hopefully do better in the future and attracting that capital.
So we need those exploration companies working, we need those discoveries right now.
Yeah, absolutely. I mean, that's how some of the majors can replace some of the reserves and resources, right? I mean, so by looking at that feeder group, if you will, at the base to provide that. So I think we need more risk capital coming into the sector. I know cannabis has kind of took it away a bit, and a little bit of crypto, but that's historic now. But I think I'm really hopeful that juniors will continue to explore, find the next deposit, and we create excitement that way too.
So mergers and acquisitions, that's a really big trend right now. What else are you looking at out there that may impact the mining space this year?
Well, I mentioned the whole, we call it digital mining, if you will, or social license to operate too. So two of those factors are some of the big focus points for companies, right? How they engage with, and build trust with local communities, indigenous regulators, and their shareholders too, right? So that's been a big focus. How they holistically approach their program to build that trust, right? And then the second one is digital mining. How can operating companies right now embrace digital tools, if you will, to do better? And it's always been, it's difficult to find a mine. It takes 10 years, right? But once you actually have something operating, how can you optimize it, right? So with a little bit of investment, you actually can employ some of these new tools that actually can be used to make your information more accurate, make better decisions, and then that way you can actually maybe be more agile. So when metal prices are running hot, if you will, or going higher, you actually can take advantage of that and scale up and be optimistic. But then when metal prices are going lower, how do you scale back and retain your margins, right? So by embracing some of the tools out there and some of the solutions, I think that quicker decisions can be made, more agile, more flexibility can be built into a company.
Do you find companies are interested in moving towards those solutions?
I think companies are willing to explore them and understand them. The tangible benefits of those tools have to be demonstrated to justify the investment dollars. Also, in my opinion, some investors need to understand when a company is putting money, maybe not in exploration, but they're putting money into these digital tools, how they see the benefit. So it's an education process.
Okay.
So I think overall, the more education that maybe we can provide and others can provide to help out with solutions, again, along the value chain, and then how they can communicate to investors and raise capital and become more efficient, it all works well.
Okay.
It all works well, and then the sector evolves to the future state, which we all want to get to, and it attracts more investors to the sector.
Okay, I'm going to change the topic a little bit. Which metals do you see the most opportunity in this year?
Well, it's I don't really comment on any metals, but sure. We've seen gold move up a bit. We've seen palladium do quite well. I like look at some of the battery metals, into the future. But it's hard to say, especially with copper and zinc, what's going to happen with the China trade talks and so forth. So I don't make any predictions. I think it's difficult to do that in the space when it's moving around. So I think working at a mining company for many years and decades, really is focusing on operations. We really can't control the metal prices, right? But we can control what how we produce and the decisions we make.
Do you have any, advice that investors who are looking at mining resources this year, you would tell them to follow?
Well, it's I really look at culture, a company's culture, and how they approach working in the community, how they work with their projects. A certain deposit is great, but then you also look at the management team behind it and how they have a culture of good values, purpose-led to, again, develop that deposit. Because I think that once you build trust with locals, regulators, shareholders even, and you maintain expectations, I think things go well, and there's typically not a lot of surprises. So I think that's really important from an investor perspective to kind of understand what kind of culture is being created at the company and how they intend to use that with respect to strategy, with respect to building actually a great company in the future.
Right, and it kind of goes back to social license, which you were mentioning before, which I think companies are starting to really pay attention to.
Absolutely, yeah.
Okay, well that's everything for me. Is there anything else that you would want to leave investors with for the year ahead?
No, I think you asked some great questions, very
Great.
topical, and I think it's been great to be on the show.
Okay, well
Thank you very much.
so much.
Yeah.
Great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Jeff Swinoga.